Welcome. It's the 301st MPC meeting of the Central Bank of Nigeria, and I am Perpetua Fasamipita. Joining me right now, I have Oladipo Ajayi, Head Fixed Income and Forex, Chapel Hill Denham. Thank you so much for joining me today, Mr. Oladipo.
Very much for having me today.
Okay. And right here with me, I also have Segun Sopitan, Principal Partner, Woodridge and Scott Consulting. Thank you for joining me today.
Thanks for having me here.
I would have started with you, beginning with the GDP, but let's leave the GDP for now because I was shocked when I saw the figures. All right, so talk to us. What are your expectations, a hold or a cut? I'm not thinking of a hike. I don't think anybody is expecting a hike.
I think we're likely, I think the CBN governor has already signaled us. So I think we probably will see a slight cut, a very marginal, just test the waters kind of cut, maybe 25 basis points, because he's expressed concerns with liquidity coming from FAAC, and a lot of other, sources like that. So I wouldn't be too surprised if we got a slight cut. Remember that we've had reduction in, inflation rates consistently now for 4 months since the rebased inflation numbers were released.
But don't you think that would be premature?
I don't think so.
We've recorded gains, especially in the foreign exchange markets.
Yes.
We have the confidence of investors, and apart from that, we're seeing stability in the naira. I feel like we probably need to consolidate all of this. Well, we probably need to watch and see the transmission happen before we start talking about cuts.
I think we have to remember that it's a balancing act. It's always been a balancing act, and we're sacrificing growth, on the altar of keeping inflation in check. Rates coming down is imperative for borrowers.
But when structural issues are not addressed, what do you do?
Well,
it's taking time.
That's why it will probably be a conservative cut, because all of those issues are still there that we need to fix. But we have to begin to try to prompt growth. It's critical. We have been hiking rates now for well over 2 years and have only had 2 consecutive holds, right? And that has had an impact on growth. As you were talking, off air about the GDP numbers. So all of these things, in fact, when it comes to MPR rates, it's always about the balancing act between growth and managing inflation.
And I know growth has always been the trade-off.
And growth has been the trade-off.
Probably, let go of that.
Where we have to remember the overarching context of Nigerian lives. And we need to push growth so that people can come out of this. We've not had a recession or a depression or anything like that in the last 2 years or 3 years, but the cost of living crisis is right there. It's staring us in the face, and it's not gone away in spite of the reduction in inflation. So I think that we need to start pursuing growth carefully without re-triggering the inflationary trends.
Inflationary pressures coming back.
Yes, absolutely.
All right, Mr. Ajayi, I know you've been listening to us here. Talk to me, what's your expectation? But before then, I want to know what you make of the just released GDP figures. Underwhelming or true to your expectation? And what role do you think this will have to play in the MPC's decision? Or you feel, the decision is already made, whether the GDP gave those figures or not?
Well, I think that figure is underwhelming because the expectation is that we'll be able to actually clock around 3.5 to 4% in the first half of the year. The first quarter of the year. Considering that we noticed a bit of FX stability within that time, and also coupled the fact that the oil price was at a high level within that time as well. So the expectation was that at least the figure we print within the range of 3.5 to 4%. So it was underwhelming seeing a 3.13. But how be it is still a better one than actually printing a lower figure than that level. So I just feel that the monetary policy guys are seeing this. They are all seeing what is happening within the inflation figure. So that will actually guide their decision today. And I actually understand what my brother was actually saying over there. But I have a bit of a different view because I feel the current gain is still very fragile. When you look at the food inflation from the beginning of the year, we're seeing a bit of retracement upward in the month of June. Food inflation went up by year-on-year to about 22.1 in the month of June. And when you compare to May, where it actually came down to around 21.1, and from the month of February to May, we'll be seeing more like a stable level around 21.1. But we noticed a bit of increase in the month of June, and also same thing with core inflation as well. Month-on-month core inflation went up in the month of June as well. These are some of the things I feel the monetary policy guy will also place on the table. And that's where they actually will likely make that decision from. So I won't be surprised for a hold at today's meeting because I still feel that the game is still a bit fragile, and towing the line of actually cutting rates may actually fuel a bit of activity in the market that can actually put pressure on FX. So I think that I will vote for a hold at today's meeting.
You know, maybe I should borrow from what Mr. Sopitan here talked about, which is growth. I mean, for how long are we going to keep sacrificing growth? Because even the CBN agrees that growth is a trade-off. For how long are we going to do this? And then when we talk about the stability we're seeing in the foreign exchange market, how sustainable is it? Knowing that all of this is just based on some of the maybe artificial, mechanical, or technical activities of the Central Bank of Nigeria. Shouldn't we begin to move towards ensuring that there is support coming from the fiscal authorities, and the structural issues are also being fixed? Do you think enough is being done to fix all of those, so Nigerians will not continue to cry while investors are happy?
Well, when you look at it critically, at any economy, when you are seeing development, the first taster of some of these developments, they are FPIs. They are the first one that can actually sacrifice their capital to take risk, and that's exactly what we've seen. And just like what you said, the fiscal policy guide needs to also double up. We've seen a bit of reform in the oil and gas sector, but I think they need to actually push that down the line further. We've seen the tax reform also that we feel could also actually lay or bring a bit of development or a bit of fresh inflow into the system. And these are some of the things that we feel that the fiscal policy guys are doing, but we feel that they need to actually double up on it so that we can start seeing the impacts on the economy. When you look at about the trade-off between FX and growth, when you come to this point in time, I don't think that the current growth is so much abysmal that we need to actually sacrifice interest rates for that currently. I understand the impact currently on businesses, but most quoted business now can actually come to the market and borrow at a lower rate than where they were borrowing at the beginning of the year. When you look at where short-dated instruments are currently trading, they are trading around 16% in the market compared to the about 22% at the beginning of the year. So it simply means that if you're a quoted company, you can come to the market to raise a CP around 18%, and that's far from where you would have borrowed from a bank around north of 30%. So as much as we understand that the true side of the coin, also the central bank also needs to be very careful so that you won't get to a level where you are now going back to actually want to raise rates when you have actually done a marginal pot. And that's one of the reasons why I felt that a 2-month wait won't kill anybody. And that's why I felt that the central bank needs to actually look clearly to ensure that they are making the right decisions and not a policy somersault.
And I was going to ask you, for how long you expect these businesses to hold up. You've talked about 2 months, so I suppose that is your answer to that question, right?
Yeah, because I feel that the best time we can have a cut will be in the month of September.
All right. What do you make of his, his reaction, his answer to that question?
Well, I perfectly understand, and there's no right or wrong answer, to be honest. It's really a matter of opinion and a matter of probably economic philosophy, economic ideology. For me, I think that we have to remember that the forces, the inflationary pressures that we've got in this economy are not primarily monetary. The monetary pressures are there. The liquidity issue is a real issue. We saw liquidity balloon over a 2-year period in fact, over a 6-month period between December 2023 and December 2022 and mid 2023, we saw liquidity double in this economy. That's been a factor, no doubt. However, there are other fiscal side cost push pressures that's driving inflation. So if we're trying to hold inflation, steady, we've achieved something, it's no longer rising, and would like to see it begin to, come down further. You might want to argue that, yes, let's hold and be cautious and all that. But given the fact that the things that are driving the inflationary pressures are not only monetary, and given the impact of the monetary policies on growth, on industry, on manufacturing, production within the economy that will drive wealth creation, I think it's about time, in my view, that we begin to ease things up a bit. I understand the concerns. That's why I said maybe a 25 basis point. And I'm kind of trying to look into the mind of Yemi Cardoso with the statement about FAAC that they released. So I would not be shocked if there was a reduction. I won't be too surprised if it's a hold, but I would not be shocked if there was a reduction. But in my view, I think we should be pushing for a reduction. Now, what do we do about potential inflationary pressures? What have we done about trying to continue to reduce the pressure, the demand pressure on Forex? We have. Well,
according to reports, now they are saying that demand is beginning to ease. That's
absolutely
what we hear.
So, and we can push that further down with some government policy, fiscal side policies. And for example, an example I like to cite a lot is the percentage of our demand for dollars that is accounted for by refined products. Now, Dangote has helped significantly to ease that pressure, but we're still importing. Why? If we take away the 30% to 40% that we still import to satisfy local consumption, pressures on the Forex market will go down further down, and we can see rates really collapse well below the 1,500, psychological barrier that we've been hanging around. What's to stop us now? What would happen to inflation if Forex rates were to crash to, say, 1,400 over the next 3 months or so? Definitely you're going to see an impact because of the ripple effect, that we know the exchange rate has within the entire economy. So I'm saying the monetary side, because of the impact and the drawback effect that it has on growth, we need to ease, whilst we then pursue fiscal policies that would help mitigate inflation a bit from the cost side. And for me, that's what I would like to see. But we'll have to wait to see what Yemi Cardoso and Co. does.
Absolutely. In less than an hour, we get to know that. We'll take a break now. When we come back, we'll continue the conversation. Stay with us. This is News Central.
Pressures. The continued global uncertainties associated with the tariff wars and geopolitical tensions could further exacerbate supply chain disruption and exert pressure on the prices of imported items. Members also noted the continued stability in the banking system, evidenced by the Stable Financial Soundness Indicators, FSIs, which would further be supported by the ongoing banking recapitalization exercise. The MPC noted that 8 banks have fully met the recapitalization requirements, while others are making progress towards meeting the deadline. The committee thus urged the management of the bank to sustain its oversight of the banking system to ensure continued resilience, safety, and soundness of the financial system. Price and other developments. Headline inflation year on year declined to 22.22% in June 2025 from 22.97% in May, primarily driven by the moderation in energy prices, especially cooking gas, wood, charcoal, and diesel. Food inflation year on year, however, rose to 21.97% in June 2025 from 21.14% in May, attributed mainly to the increase in the cost of processed food. Core inflation, that is, all items less farm produce and energy, also increased to 22.76% in June 2025 from 22.28% in May, reflecting an uptick in the cost of information and communication, housing and utilities, and personal care and social services. On a month-on-month basis, headline inflation rose to 1.68% from 1.53%, largely due to increases in the price of services and imported food. The committee acknowledged the efforts of the federal government in improving security and its impact on food production. Members thus urged the government to continue its support towards timely provision of high-yielding seedlings, fertilizers, and other critical inputs for the current farming season. The MPC also noted the sustained stability in the foreign exchange market, accentuated by improved capital flows, earnings from increased crude oil production, rising non-oil exports, and significant reduction in aggregate imports. Real GDP in the first quarter of 2025 grew by 3.13% compared with 2.27 and 3.38% in the corresponding and preceding quarters of 2024, respectively. In addition, recent data on the Purchasing Managers' Index indicates that the Nigerian economy remains on an expansionary path. The external sector also remains stable and resilient, despite persisting uncertainties in the global macroeconomic environment. Gross external reserves rose to 40.11 billion on July 18, 2025, representing about 9.5 months of import cover for goods. Global developments. Available projections suggest that global output recovery continues at a gradual pace. However, recent developments, especially the persistent tariff war and the geopolitical tensions, may continue to disrupt supply chains and exert upward pressure on the price of imports. Disinflation in the advanced economies has slowed, prompting major central banks to be cautious of upside risks to inflation. In the emerging markets, central banks continue to calibrate monetary policy to their domestic conditions, noting the persistent risks to inflationary pressures. Outlook. Staff projections indicate a further decline in inflation in the coming months, underpinned by the current tight monetary policy stance, stable exchange rate, declining PMS prices, and moderation in food prices as the harvest season approaches. Given the persistent uncertainty in the policy environment and underlying price pressures, monetary policy will need to maintain its current stance until risks to inflation recede sufficiently. The committee remains committed to the bank's price stability mandate and will take appropriate measures to foster stability and confidence in the economy. The next meeting of the committee is scheduled for Monday, 22nd and Tuesday, 23rd of September, 2025. Thank you.
Thank you. That was communique number 158, presented by the chairman of the MPC and the governor of the Central Bank of Nigeria, Mr. Olayemi Kadoso. We'll now take questions from members of the press. State your medium, your name, and ask your question. No multi-pronged questions, please. Thank you.
Thank you for staying with us. And you just heard the chairman of the Monetary Policy Committee, who also doubles as the CBN governor, talking about the fact that the MPC decided to hold rates. And we see that a good number of the economists that we polled talked about the fact that they're expecting a hold. So we're not surprised. And I have right here with me Felicia Awolope, who is also joining us to look at all that has been said today. Thank you so much for joining me.
Thank you for having me.
All right. So you heard what the CBN governor talks about. You know, they are holding rates at 27.50. The CRR is being maintained. Liquidity ratio is being maintained. The asymmetric corridor, I think, also is being maintained. So everything is basically being maintained. Does that align with your expectations? I didn't get to ask you that earlier.
Yeah, definitely. So, I mean, coming into the year, we got into February and inflation pressures looked like they were easing. We entered the disinflation trend. By June, inflation had declined for the third consecutive month. And that sort of signals like, oh, we're beginning to see the impact of previous monetary policy decisions on inflation, you know, as an indicator. But if you look at the current, you know, macroeconomic space, particularly the global scene, you'll see that you agree with me that there are a lot of uncertainties surrounding the tariffs by the U.S. administration with trade partners, and which holds the potential of driving prices for global commodity, you know, up. And this could, of course, would have outcomes for even domestic prices if this risk should materialize. And this was one thing that we expected that the MPC would consider, even though we're on a disinflation trend, inflation is moderating and all that. But on one hand, there's this potential risk of inflation that could materialize and just turn the tides and reverse all the gains that we've recorded.
Do we really have gains?
Well, to be honest, I would say we have gains. Yeah, inflation figures are showing that prices are not rising.
Rebased inflation figures.
Yeah, rebased inflation figures. But even without rebasing, you would agree with me that the rate of increase in price levels this year has been quite milder compared to the sharp increases that the economy recorded last year. And if you look at borrowing costs, if you look at market participation, you know, T-bills rates are already at 18%, 17%, which is, you know, there's already a disconnect between the MPR and what rates are in the fixed income market. So it's not like there's that, you know, maybe intense pressure from borrowing cost on part of the government and corporates. And so if there's already that maybe sort of relief or temporary respite, and there are pressures and there are risks that could materialize. And of course, the equities market is the stability of the naira has been something that has been driving improved earnings and performances for companies. And, you know, this rate at attractive levels would still help bolster stability for the exchange rate. So all this together just, you know, points at the fact that we expected that the MPC would still be quite reluctant to just start cutting rates, seeing that a lot of things are still up in the air. And so they want to, you know, fully monitor how some of these things will play out before pivoting to a more accommodative stance.
Oh, that's interesting. Before I move on to my other guest, I want you to comment a bit on the inflation, because I was particularly surprised when I saw June inflation figures. Headline inflation is, you know, down. However, food inflation and core inflation up. I don't understand that mathematics. Maybe you can help us.
I mean, to be honest, the figure was, you know, sort of a challenge for some analysts to actually, you know, explain, seeing that the contribution and the weight of some key components that recorded upticks, you know, were quite significant. Food inflation was, you know, holds quite, you know, contributes quite significantly to what the headline index would be. And then, of course, core inflation also is a key component of the headline index. But, I mean, looking at the energy price decline, the energy index declined maybe quite steeply. Maybe we would want to say that the decline in energy is what offsets the upticks in food and core inflation. But that is what data tells us, and I think that's what we have to believe.
All right, that's interesting. Mr. Ajayi, I believe you're with us. So I would like you to speak to this. She says that's what the data tells us, and that is what we have to believe. First, I'd like you to just make comments on some of the things that the CBN governor had said, and also your take on inflation figures for June.
Well, I think what the CBN governor said was in alignment of our expectation. And just like what I mentioned earlier, I mentioned that the economy is still very fragile, so it will be too premature to actually take accommodative stance in such a time as this. When you look at food inflation for the month of June, month-on-month food inflation went up to about 22% from 21.1. When you look at the core inflation, I think core inflation went up to about 22.76 from 22.28. And all in all, although the headline inflation moderated, one of the reasons is the base year effect. So because when you look at last year, when you look at the base year, it actually has a bigger figure. So that's one of the things that actually weighed down the inflation figure for the month of June. And that's one of the reasons why I felt that it's still premature to actually take that accommodative stance in this time. And my best bet for now, I still continue to say that September looked like more like the earliest day that we can get any rate cut. And even the CBN governor also mentioned that they will keep tab of the performance of inflation, and that to a long extent will determine their reaction. And also to actually corroborate what one of the analysts on this program said, that what is happening in global economy is also a very key factor to actually consider. And that is true because when you look at the current tariff war that is ongoing, the tweak in this can affect global economy, and that can also impact Nigeria as a country. Don't forget that just after COVID, we also fought the battle of the Russia-Ukraine crisis. And Nigeria was heavily affected by these as well. So Nigeria is not insulated from some of the global crises. And you don't want to actually toe the line of actually reducing interest rates just because of what happened globally. You suddenly reverse your decision and you now change your stance to more like a contractionary policy. So I think the central bank governor, the monetary policy guy, they are in line with their decision.
Right. Okay. So let me get your thoughts, Mr. Sopitan.
Well, I mean, it's not a surprise, and like my colleagues here have said, nobody's shocked. I expressed what I hoped for, from my own economic ideology standpoint, and given some of the other factors within the larger economy, beyond the monetary factors. But it doesn't, it makes sense, to hold. It's not an outlandish decision. And we'll just have to hope that all of the other indicators would continue to improve such that we can see a cut in September. You could hear from the narrative that the CBN governor had put out ahead of this meeting that they are already considering a cut, but they are giving you reasons why it can't happen. So you'd see that, for example, they say, look, liquidity is a problem because of FAAC. That's already a it's an advance warning. It's an advance notice to the economy to say, we can't cut yet. FAAC is still messing things up from the liquidity side of things. So it's okay. I think we'll continue. In terms of, especially from the monetary policy stand, the CBN is doing a good job of keeping all of the indicators stable so that the economy itself can then perform at its optimal based on the structural, side of things. But there's still a lot of work to do. From that structural side, from the fiscal side, we've got a long way to go. We can't forget that, like I said earlier, we're still facing a cost of living crisis. Like she said,
whether we like it or not, even the disinflation we're seeing is still elevated.
Absolutely. So like she said, yes, we're seeing disinflation, right? We know that prices are no longer increasing at the rate they were a year ago, a year and a half ago, but prices are still high. A bag of rice is still 82,000, and you could just go on and on. So things are still out of reach for the ordinary Nigerian. And for me, all economic policy, all government policy has to be about the human impact. So whatever we're discussing here in terms of those macro numbers, they're meaningless to the man on the street. And that's always where I come from when I look at economic policy and what government is doing. So one would really hope that the CBN can fast track whatever it can do to help let's begin to see a moderation in prices. And that's why I wanted more.
Do you think the CBN has more headroom?
I don't think. I think they're doing
feel like it has deployed all it has.
All the tools available. All the tools available to the CBN, they have managed dexterously. They've done very well, with that process.
So we need to begin to fix structural inefficiency.
Yes,
so where do we begin from? Maybe I should
side.
Let me come to you for that.
I think I've always mentioned, I think I even mentioned at some point earlier on this show, maybe in the beginning of the year or last year, that, from the monetary aspect, we are seeing the monetary authority do as much as it can. They've employed as much tools as is in their, capacity to control inflation, to control money supply. If you look at money supply figures, it looks like the pace of increase in money supply is also slowing down. And so they have done as much as they can. But of course, there's a need for the fiscal side to match up this energy. There's a need to make sure there's proper and adequate infrastructure, roads, security in food producing areas, which is a major, major driver of food inflation. Benue State, as it has been going through, a bout of insecurity where there are clashes, where farmers have not been able to go about their duties. And of course, this would impact harvest yield, seeing that Benue is a key, region for food production. And so when we see harvest yield that are less than expected, that are less than par, it already creates an imbalance for supply demand. And so there's already a supply imbalance, and demand keeps increasing because population keeps increasing and all that. And so it's just worsening the already bad situation. So there's just need for the fiscal authority to step up and match up this pace of implementation from the monetary authority. We need good roads. We need the agricultural system, the agriculture sector to see a lot of reforms. And yeah, we're seeing some of these reforms, but they need to become effective. Okay. Not just reforms that we see on paper, but we need to start seeing gains from these reforms, so that, food prices become, maybe less volatile. And then, of course, look at every other thing, electricity, look at exchange, all those things. When there is a match from the monetary and the fiscal policy, then we'll be seeing better gains, better impact of these policies on the actual real economy.
All right, Mr. Ajayi, let me ask you this particular one now. Talking about some of the gains we're seeing, what's delaying the transmission? I mean, what's happening to the transmission mechanism? That's on the one hand. And then on the other hand, we keep talking about structural inefficiencies. And I don't think anything has been happening so far. We hear about policies and reforms. And I know the tax reform law, we're looking at January 2026 for it to start being implemented. And we've heard several pronouncements, yet we are not seeing any visible change, especially coming from the structural angle. What do you think is the challenge here?
Well, I think that on the macro side, a lot of things change. But when you look at the micro side, we're not seeing the impact on the micro side. And one thing about it is that we need to actually see that growth or that impact on the macro side before we start seeing affecting an average individual in the country. You see what Felicia mentioned there was that when you look at the crisis in Benue, you look at Plague 2, and these are one of the two biggest producers of food in Nigeria. And in such states like that, you don't expect to actually see issue of insecurity actually elongating in such as we are seeing currently in the country. And when you see issues like this, every time I hear about crisis in Benue State, what comes to my mind is food inflation, because I know that one way or the other, that will actually impact food prices. And at the same time, infrastructure is also another thing that the government needs to actually work aggressive on. From getting the product from the farm to the place of consumption is also a big deal. Because when you look at cost of transporting food from the farm to the place or marketplace, more like the urban area, it's actually on the high side. And some of these farmers will also need to price into the cost of their product. And that's one of the reasons why we keep seeing that elevated prices of goods in the market. So the government have said many things, and just what you said, that would not see much impact of what they have said. I think the tax law, like you mentioned, that won't take effect January next year. I expect that to impact people directly or very quick, considering the fact that the modality and the implementation plan, we expect to see the impact so quick. And on the production of food as well, we've seen the situation whereby the government has ensured that try to actually ensure that the food producing states they actually secure. And I think the government needs to actually work more on this. They need to actually step up the game in that area. And also, you see policies around actually ensuring that maybe foods and some other products like that are actually tax exempt. And also, when you look at the cost of actually clearing some of these goods at the port actually be reduced, so as to ensure that the end price is actually reduced, so that a consumer can actually buy at a lower price. So if the government can actually work aggressively on some of these policies, I think we'll see the impact on the average Nigeria. But the fact that they've been slow about the implementation, and that's one of the reasons why we are seeing the lag between the time, the pronouncement, and the impact on the people. Look at what the central bank is doing. Central bank, they are actually working their talk. They will release a circular and will implement just immediately. And that's what I expect the fiscal policy guys to also do. Beyond just pronouncement, you need to actually ensure the implementation of this policy. And the implementation is what will actually bring that relief that our Nigerians have been waiting for.
I think from what he said, one key thing I took from that is bureaucracy, really, because at the end of the day, that's what we see affecting some of these issues. And, you know, because there are so many people involved, really, when you look at it, you couldn't have expected the presidential committee to come up with something and then we start running with it immediately. There are certain things, structures that need to be put in place, because even if you look at the law, you see whether you're talking about the Joint Tax Revenue Board, a lot of things need to be done. We need people from different, you know, boards, agencies to join that. And, you know, a lot of things really that we need to do. But still talking about this food issue, I am worried because, I mean, what we're seeing is a carnage, and, you know, some persons are beginning to call it genocide. Can there really be progress without addressing this insecurity? What do you think?
you know, the impact, first of all, we must, you know, for me, again, whatever we discuss must be about lives, must be about the human being. That's what governance is about. That's what policy should be about. And therefore, we must be careful in the way we relate with this so we don't sound insensitive. These are human beings dying in droves every week. You know, it still happened last week. 20 people in one village, 15 people in another.
In food-producing areas.
In food-producing areas. So the loss of life itself is painful enough. And then to now make that worse, it has a ripple effect on the entirety of the Nigerian, you know, citizenry, where now inflation is continuing. You know, this, and that's my issue. Look, the inflation that we see now is no longer really a monetary-driven inflation. It's these structural issues. It's insecurity and infrastructure, primarily, you know, and then one or two other factors. So do we see an end? I'm sorry, I'm not really a particular optimist when it comes to this issue because it looks intractable. You know, it has predated this administration. It predated the one before that and the one before that. And it's still happening.
But we can't keep talking about, you know, wanting to deal with inflation and all of that without addressing this issue.
We've got to fix it.
Because we know how it contributes to food. And the average Nigerian spends over 50%. I'm trying to be modest here. Over 50% of their income on food.
Absolutely. In fact, the NBS actually says 65%, which was the mystery why it was a weight of 50% was assigned to food. You know, in the 51% or thereabouts, you know, in the CPI basket, you know, the average household spends about 65% on food, right? So it's a big problem. And it's surprising to see that the government is not taking this on with the level of seriousness and importance it deserves. This is a crisis. It is an existential crisis, both in terms of the lives that are being lost and in terms of the impact it is having on the rest of the country. You know, and it's not just in Benue. You know, you can count about 6 states in the North Central and the Northwest where there's carnage on a daily basis. So for me, I think that the government has to do far more than they're doing, you know, to fix these issues that we're all suffering from. The reason beans will not go down and the reason rice will not go down is that the people that are producing these things, tomatoes, you know, and you can just continue to reel out the produce, yams, you know, is that the farmers can't really go to the farm. And it's not just in Benue, you know, Zamfara State, you know, Sokoto State, you know, all of that, the North Central and the Northwest, farmers can't farm. So a lot of what we're eating is from the few that can and the rest of the country. So the government has to do, we need to treat this, it's a call for me, you know, to the government to see this as an existential crisis. That popular political reframe of state of emergency in something, we need to apply state of emergency in food production and security in this country to fix this issue.
Well, the state of emergency was declared, I think, sometime last year. We just haven't seen.
There you go.
We haven't
We've seen nothing about it. In fact, it was the year before, actually.
Okay.
It was 2023 that state of emergency was declared, and here we are. So it's not funny. It's something that we really should be bothered about, and I'm hoping that the government will see the impact of this and the import of this on the desired economic outcomes they would like to see. If you don't fix these issues, the 7% growth rate that you are targeting, the $1 trillion economy you want to see, will not happen. You know, because if you don't feed your population and they're healthy, these things tie up together. There won't be economic development and progress because the people that are supposed to drive that productivity are hungry. People are hungry in Nigeria today, Felicia. They can't feed. I mean, perpetual.
Yeah,
they can't feed, you know. So it's something that I think we are not seeing the level of importance that it needs to carry in terms of government action, you know, and inaction, if you like.
But I'll come to you, Mr. Ajayi, but just before I come to you, I would like you to just say a thing or two on this particular issue.
I mean, like as it has been said, the fact that there's not been a proper address of this insecurity in the major food producing area is why we always come back to this topic over and over again.
But, you know, let me just come in here. I've had interactions with certain people and they are saying, oh, insecurity is not that serious. Like, for them, they believe insecurity probably doesn't take as much as we think. They're talking about yields, they're talking about quality of seeds, and they are saying if there's insecurity in one area, you know there is insecurity in an area. We're not saying you should abandon them, do what you need to do. But in the meantime, maybe you need to empower other areas, other parts of the country. And we also hear that some farmers are beginning to move to other parts of the country. What do you make of that?
Well, to be honest, insecurity remains a significant, challenge for the food sector. While I would not rule out the other challenges, like the fact that farmers, because of the nature of the Nigerian agricultural sector, where the bulk of the farmers are subsistence farmers, and so a lot of them do not have as much access to credit, as much access to technology advancements and, large-scale equipment that could actually help drive better yield from the little that they have. The fact that the bulk of them do not have the large-scale capacity is already a problem where the federal government needs to step in and make sure that, first off, capacity is enhanced for most farmers. If there are going to be consolidations, let there be proper dissemination of information, let input costs or inputs, free input subsidies, let it actually get to the people who need it. In Nigeria, we tend to see a lot of policy on paper where the federal government has allocated so amount to subsidize input for farmers. Federal government has allocated so amount to empower so many farmers. But if you follow the trail, you would discover that I don't want to give 10, but 6 months, 1 year down the line, nothing has really happened in the real sense of it. But the fact remains that some of these areas are actually concentrated on farming. They are known for farming. They are known as major producers of some key staples for the Nigerian economy. And, with existing challenges, there's now the fact that they can't even go to the farm at all. Whether yield is going to be good or not, they can't even go to the farm. For some of them that have been able to plant, they are not even able to harvest because there are security issues, because they've been killed, and because the ones that have not been killed are wary and scared to go to the farm. And so while it would look like, yes, it's not just insecurity, it is a major problem, and it is just exacerbating the already existing issues of the fact that policies and subsidies and a lot of these things that are said to be rolled out do not actually get, you see point. Every administration, like I've said, I think I've mentioned this before, every administration has plans for food security. Every administration that has come has plans for food security. There's always an amount of money earmarked for grants, earmarked for, but the problem remains when there's not effective implementation. And then there's already that problem, and then insecurity is coming up. This time last year, Benue was not seeing this much insecurity. Now, adding that to the already existing problem where there are already insecurity in some other major food producing areas, and then Benue has joined, this league, it just makes things worse, to be honest. And if there are no proper action taken, we'll keep coming back to this topic over and over again.
All right, thank you. You wanted to say something?
Let me jump in just with a quick rejoinder to that point you made, that some people are saying. It's important that we understand that Nigeria's agricultural sector is not sophisticated, right? The reason the Benue Basin and the middle belt, like we used to say North Central, is a food basket is climate and topography. It's not something we control, So countries like Israel farm in the desert. Nigeria can't do that. We don't have the capacity to do that. Irrigation is a problem, and all of that. So it's not enough to say, oh, increase yield in some other places. This is the natural food basket region of Nigeria. You can't shift that in enough numbers to compensate for what you're losing. So it's important so that we don't take away from the importance of the need to fix the security issues in those places.
Absolutely. Thank you so much. Mr. Ajayi, I believe you heard everything they said. I'm not sure we want to take more on that. Let's come to Forex. We're talking about stability in the foreign exchange market. Somewhere, I'm just thinking, what percentage of that is a direct impact of the tight monetary stance of the CBN, and how do we ensure that this is more structural and more sustainable? Mr. Ajayi, did you...
On the part of the central bank, they've been doing their bit to ensure stability of... Yeah, like I was saying, I said on the part of the central bank, they've been doing their bit to ensure the stability of the currency. And if you remember, when the new administration came on board, they mentioned that they are actually harmonizing all windows. And as we speak, currently we're seeing that the spread between the official window and the parallel window has actually thinned out aggressively. And like I mentioned earlier on, that of course we may not have been seeing the impact on the macro side. I think on the macro side, we've been seeing some gains, and that's one of the reasons why we've seen that influx of investment into our economy. That these are some of the news that are actually helping to actually support the currency as we speak currently. And I think the first test for the current CB administration actually happened after the Liberation Day announcement in April, on I think on the 1st of April, where the president of America actually mentioned that they're going to impose a tariff on some countries, and that actually became a global crisis and actually put a test to the capacity of the central bank. And a lot of foreign investors trying to actually exit Nigerian markets. Actually, they tested the plumbing of the FM window, and the central bank was able to actually provide liquidity to the market. Of course, we saw the currency actually move to around 1,600. Even at the time, it traded a bit above that level at the official window. But as we speak now, we've seen retracement to that psychological level of 1,500. And I think that on the part of the central bank, they've been doing justice to that. And that's one of the reasons why I also think that the central bank will be very careful to actually toe the line of our commodity policy. And when you notice what is happening in advanced nation currently, we are seeing more like a slowdown in disinflation. We saw what happened in the United States at the last count. It simply means that as we speak, Nigeria can't just run to actually make decisions like cutting rates aggressively now, because the impact of that is that it simply means that the spread between a Nigerian instrument and a U.S. Treasury will actually thin out. That will reduce that cover that most of these investors have been enjoying, and they will not have mind to actually flee Nigerian market to actually maybe flee to a better country where they can actually have a better return. So I feel that the central bank is doing what they need to do in times like this. And just like what the CBN governor mentioned, that FAAC has been one of the greatest challenges that they've been facing. And what the central bank has been doing is that we keep seeing them coming to the market aggressively to mop up this liquidity. But the concern is the cost of mopping up this liquidity. When you look at the effective return of some of these issuances, they are as high as 28%. So the concern is that for how long will central bank continue to do this? And for how long would they want to actually hold this line before finding a lasting solution? But when you look at it all in all, I think we're on the right path. We just need to actually work faster to actually get to a better level.
All right, thank you for your thoughts on that. I mean, away from, what the Monetary Authority is doing, can we also look at, from the Fiscal Authority, really, whether we want to improve export or do some other things to ensure that we generate more foreign exchange?
Well, that's very necessary because on the part of fiscal policy guys, I think a lot of reforms are ongoing in the oil and gas sector. What they are trying to do is to attract more investment into oil and gas sector because we are not where we used to be. Sometime in 2023, we barely produce 1 million barrels per day. But as we speak now, I think we're doing about 1.7 million when you actually consider both the production and also the condensate. And I think it's we have moved from where we used to be. So we just need to actually ensure we speed up some of these reforms, attract investors to that space. Because for Nigeria, as we speak now, we need to actually improve production if we want to increase our FX generating capacity. As we speak currently, oil still remains like one of the highest contributors to our FX generating revenue. As we speak, the contribution is about close to about 80%, if not more than that, currently. So we need to actually further deepen what is happening in that sector. And as much as we're looking at that, we are not supposed to take our eyes away from what is happening in the mining sector. And I think that should be more like the new babies on the block, because the government is not actually enjoying or actually sweating that sector. The government needs to find a way to actually sweat that sector better. And the agricultural sector as well. The problem with that, we have actually talk at length around that because the quality of produce is not something that can actually compete globally. I remember at the time, there was one time that we were trying to export yam to United States, and half of that product is not of the quality by the time it actually got to America. And part of the problem is the seedling. So we need to actually find a way to actually help farmers with quality seed. And aside that also, we need to actually revamp the whole agricultural value chain. Nigerian government needs to actually support farmers to actually help them create storage because when there's storage, it helps to actually reduce the loss after harvest. These are some of the things we need to do to actually help to actually increase the effect generating capacity.
All right, thank you. I'd like us to close this conversation by taking a thought from every one of you. Let me begin with you, Felicia. What's your outlook for inflation? Because the CBN governor has said they will continue on this trajectory until risk to inflation recedes sufficiently.
Okay, thank you for your question. I mean, while we might not be, personally, I might not be able to give, an actual figures or, forecasts, as we don't have enough information given the recently rebasing. The recent rebasing, comes with a lot of peculiarities that we are yet to get a good grasp of. So but speaking to general expectation for price movement, I think I'll take them one component after the other. For food, yes, we are beginning to enter the harvest season, Q3, Q4, where there is improved supply of food. And so this could mean that maybe food prices would, the pace of increase would slow down. Maybe there will be more robust supply. Maybe the pressure on food prices could lower. But, I mean, like I mentioned earlier, the fact that there are already, challenges at some major food producing areas where some of this, harvest is supposed to come from is something that could now moderate the yield, harvest yield that we'll be getting. If you're comparing... Effective supply could still be maybe higher relative to the beginning of the year where it was planting season. But the fact remains that if you compare with maybe last year, levels, we're not sure where we're going to be because of the challenges that we've mentioned. These people who have planted might not even be able to harvest due to this ongoing insecurity. So there's the concern with what harvest yield would actually be like. And what that could mean is that, yeah, we could see food prices actually moderate, by the beginning of the harvest season. But post-harvest, will we have enough supply to last us at least well into the, planting season or the next planting season? And that means that the reprieve that we'll be getting from this harvest season might be short-lived. There's that part. But on the other hand, imported food inflation could, it's two-pronged too. Would global commodity prices still remain stable? If global commodity prices remain stable, then exchange rates we've been able to achieve stability, so to speak, and then that means we might be getting a reprieve from imported inflation.
I have just 1 minute to go. Okay, I really don't know if I can take... simply just tell me your outlook for inflation.
I think we're out of the woods. I think that inflation will likely moderate. It seems as if we found equilibrium, and we now need to find out what the extra needs to be to begin for us to see prices actually coming down. I don't think we're ever going to go back to seeing the kind of,
numbers,
aggressive inflationary, effects that we've experienced in the last year and a half. So I hope that somebody will have enough courage to do the things that need to be done.
Exactly. Thank you so much. Mr. Ajayi, I'm afraid I may not be able to take your last time, but you spoke extensively on the foreign exchange, so we'll probably just leave it there. Thank you so much for coming on the show. Oladipo Ajayi, Head, Fixed Income and Forex, Chapel Hill Denham. Thank you for your time, sir. All right, and also many thanks to Segun Sopitan, Principal Partner, Woodridge and Scott Consulting. Thank you for your time.
It was a pleasure. Thanks for having me here.
All right, Felicia Awolope, thank you so much for coming on the show. Investment Research Analyst, Meristem. Thank you for your time.
For having me.
All right, I hope you had a great time listening to us and also listening to the CBN governor. The rate was held at 27.50 and all other parameters were held. Thank you so much for joining us today. I am Perpetua Fasabe Pizza. Do enjoy the rest of the day. Bye for now.